The crypto world is holding its breath as the U.S. Securities and Exchange Commission, SEC, undergoes a dramatic shift in its approach to regulating digital assets. Gone are the days of aggressive crackdowns, replaced by a new era of constructive engagement and clarity. But here's where it gets interesting. This change, spearheaded by new leadership in 2025, is already sending ripples through the market, leaving many wondering, is this the dawn of a more crypto-friendly SEC? Let's delve into the details and explore the potential implications for the future of cryptocurrency. The departure of Gary Gensler and Jaime Lizarraga paved the way for Paul Atkins, whose leadership has marked a significant departure from the SEC's previous hardline stance. This shift is further emphasized by Hester Peirce, now at the helm of the SEC's Crypto Task Force, who has been instrumental in reshaping the agency's regulatory agenda. The impact of this new direction is already tangible. In a surprising move, the SEC dropped civil actions against major players like Coinbase, opting for dialogue and compliance over punitive measures. Ripple Labs also benefited from this softened approach, receiving a reduced civil penalty. These actions signal a broader strategy to foster market stability by reducing uncertainty and encouraging innovation within the crypto space. But this shift goes beyond just enforcement. The SEC has approved in-kind creation and redemption mechanisms for crypto ETPs, bringing them closer in line with traditional financial products and boosting liquidity for investors. And this is the part most people miss. A new framework is being developed to separate yield-generating activities from stablecoins themselves, addressing potential conflicts of interest and improving risk disclosures. These measures demonstrate a more nuanced and adaptive regulatory approach, acknowledging the dynamic nature of digital assets. Industry observers are interpreting these changes as a sign of the SEC's growing openness to innovation. For instance, the approval of staking mechanisms in 21 Shares Ethereum ETF highlights a willingness to integrate emerging practices into mainstream financial products. Analysts believe this could pave the way for the approval of spot Bitcoin and Ethereum ETFs, further bridging the gap between crypto and traditional investment portfolios. However, the long-term implications of these changes remain to be seen. While the new leadership under Atkins seems to be striking a balance between regulatory oversight and market growth, the success of this approach hinges on the SEC's ability to navigate the intricate complexities of crypto regulation. Atkins' Project Crypto initiative aims to bridge the gap between traditional securities regulations and the realities of blockchain-based financial systems, recognizing the need for tailored solutions in this evolving landscape. Is this enough to truly foster innovation while protecting investors? The jury is still out. The regulatory landscape is further shaped by legislative developments, like the proposed Genius Act, which aims to establish a framework for stablecoins. This act would mandate high-quality reserves and regular audits for stablecoin issuers, increasing transparency and investor confidence. Such initiatives could significantly influence the SEC's approach and solidify its role in overseeing the digital asset ecosystem. In essence, the SEC's recent policy reshaping reflects a more structured and transparent regulatory approach to the crypto market. While challenges remain, particularly in classifying the diverse range of digital assets, the current trajectory suggests a move towards a more inclusive and regulated environment that could support the sector's long-term growth. The question remains, will this new approach strike the right balance between fostering innovation and ensuring investor protection? Only time will tell. What are your thoughts? Do you believe the SEC's new direction is a step in the right direction, or are there still concerns that need to be addressed? Let's continue the conversation in the comments below.